And that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report. It is 11/5/2020, and we're ready to rock and roll. Markets are in rally mode here, guys. 4 days in a row to start the week. 2 days after the election day on Tuesday, even with political uncertainty, still lack of clarity on some of the election front. But really, the market is shrugging any of that off and just focusing on the themes that we talked about yesterday, actually, and just up across the board. The NASDAQ's up over 2%. The S&P's up over 2%. And yes, even gold is taking off here today, up over 2% as well. We got the Fed meeting today that we're going to analyze and talk a little bit about what we expect or looking for from Jay Powell and the crew over there at the Federal Reserve. Policy statement later after our show today. We'll take a look at the dollar and talk a little bit about that. And yes, we got corporate earnings again. You know, some big companies, some big names actually reporting, coming out with some of their numbers. We'll analyze that, break down the price action, and talk to you guys about what we're seeing there. Full crew here today. We've got Matt doing analysis. We got Mark doing analysis, Cody on the back end hosting, and I am your host here, Tim Justice. Welcome. If you are a veteran of my community, hashtag Team Tackle right in the chat. Let us know, represent, come on in here and let's have a great discussion today in that chat. Appreciate the way you guys have been handling that lately. If you're brand new to our channel, click subscribe, click the bell, come back and join us on a daily basis. But let's rock and roll. Saddle up here, boys. Matt, how you doing today, sir?
You know, Tim, doing absolutely excellent. I'm excited to hang out with the crew today to break down the market action. And there's a lot of market action across the board here today. Gold, Bitcoin, sectors, market analysis. I'm excited to break it down.
Yeah. You know, let's start with the technicals here themselves and just kind of have a discussion. You know, Mark, I was talking to you on the phone earlier. You gave me a call and you're like, hey, you know, and as we do many mornings, by the way, the coaches at Tackle Trading on conference calls or on the phone, we're sitting here talking about the narratives, thinking about, you know, what is happening out there as we're preparing for these shows and whatnot. And Mark, you're like, okay, this is a huge rally. What are you doing with the market? And Mark, some of you don't necessarily trust what you're seeing, but Matt, the price action is completely bullish. I want to get both your perspectives on this. Matt, start with you here and give me a read on what you're seeing technically from this rally.
Yeah, let's take a look at this from a technical perspective. First and foremost, we talked about this 3,400 level, right with that, you know, right where those moving averages. Do we have some feedback coming in from?
We're good. We're good now.
Good. Yep. All right. But you know, when we talked about this level of 3,400, right where that cluster of moving averages, the 20 and the 50, and moving averages, and Mark will attest to this, but moving averages are not that important when it comes to some degree of neutrality, but it does give you a visual on the chart where it breaks back above that level. And with that coinciding right there at that 3,400 level, which is one of those significant whole numbers, we've seen the market act as support and resistance. We've talked about those significant whole numbers of how important the market has relied on those significant whole numbers over the course of the last 6-7 months. And so that 3,400 level, once we broke out of that level, and let's break this down on an intraday chart very quickly, once you did break out of that level post-election here, you see the violent volatility a little bit, not near what we saw in 16, but you saw a little bit of volatility here during the election night. Once you actually reclaim that, as that volatility subsided, you see it come down and kiss off that 3,400 right there. And ever since then, you've just had this fairly standard bullish uptrend now where, you know, when you're looking at this on an intraday basis, you got a series of higher highs, higher lows. One thing we are starting to see post-election, post-movements to the upside, we're seeing a little bit of slowing momentum here ever since really on the overnight last night. Had a lot of price action coming into the overnight action, really kind of hesitated here over the course of the last 5-6 hours in trading. And I think that's to be expected a little bit. You know, we're still, I mean, let's face it, guys, we're still in the middle of an uncertain election where even on a Thursday, we don't exactly know who our next leader of the United States is going to be. And so you've had this 4-day rally, you know, that started really on Monday, Tuesday, Wednesday, Thursday, kind of building up that rally. It's been a very, very impressive rally. You started off the lows, however. And so with a lot of those earnings reports from the previous week, i.e. the Apples, the Googles, the Amazons, the Facebooks, the Microsofts of the world, they for the most part had very, very, very good earnings. And outside of Google last week, the theme of the market was we're just not buying anything in front of this election. We talked about, the previous 2 weeks before the election about how these earnings, very, very positive earnings, 86% of companies reporting better than expected EPS, 81% of companies reporting better than expected revenues. And just to name a couple, Amazon, Facebook, Microsoft, and those Google, those stocks had amazing earnings numbers, and for the most part they got sold off a little bit. And so now post-election, I think you're seeing a little bit of, we were just a little bit oversold in the short term. The market is coming back to focus a little bit on those positive earnings. Look at Qualcomm today, look at some of those gold mining stocks today. We'll break those down, but we're starting to see earnings, and especially the positive earnings we saw from last week. We're starting to see that belief come back into the market a little bit there, Tim. And so I think over the last 4 days, you have this combination happening where you simply had some undervalued nature in the market in the short term, based on what we were seeing with the earnings reports over the last 2 weeks. And so when you're sitting at this support level near, that 3,200 level, you're overextended to the downside. You see RSI here completely overextended to the downside in the short term. So you're looking at that market as a little bit oversold, sitting at support post-election. Now you're talking about these themes that are developing, and so you have this natural reaction to having oversold stock conditions, a reversion to the mean by buying up at support. It drives the market up. But then you have that backstop and the belief, and I talked about this yesterday as well, these themes that the market has been lacking over the course of the last 2-3 weeks, they're now starting to adopt themes again. The first theme they're now starting to adopt is that positive earnings trend that we talked about, not the economy, guys. The economy has nothing to do with this right now. And I know that's weird to think about, but nothing happening in the market today or the last 3 days has anything to do with the economy. We're looking at this as the market seeing that the market was overextended in the short term, underpricing in some of those positive earnings from the previous couple weeks. Earnings is coming back into focus here this week. Second of all, like we talked about yesterday, not a lot of people yesterday were like stimulus, stimulus, stimulus. People are like, we're not going to see stimulus again. People out there in the market were like, how are we going to see stimulus? McConnell doesn't want to go above $500 billion. But what did I say yesterday? I expect a massive stimulus program to actually happen with the Republican-led Senate and a Democratic majority in the House. And I expected that yesterday. What did McConnell say today? My top priority, my number one priority before the end of the year is an economic stimulus program. That is what that's what we talked about yesterday. We saw McConnell hint at it yesterday. We're seeing that continuation of McConnell literally saying today, that is my number one priority. That is that theme that is developing yet again in the market. What else do you have starting in the market today? You have now with the Bank of England. The Bank of England last night reported monetary policy, and they kept a negative interest rate. But what did they do? They increased their quantitative easing program by $150 billion. 150 billion pounds. 150 up to 875 billion pounds. So when you're looking at that, the market is now looking at Jay Powell today, and Jay Powell today is on tap to give us his press conference at 2:30 Eastern. Monetary policy comes to us in about an hour and 15 minutes from now. And so now the market is looking at Jay Powell saying, all right, Jay Powell, you've been very silent. You've been very silent for the last 6 to 8 weeks. The only thing you've been talking about is the need for fiscal stimulus. I mean, we could have created drinking games and got the entire world drunk for the election just by taking a shot every time he said the word fiscal. And so now you have fiscal stimulus back on tap. And now the market is looking at Jay Powell and they're saying, are we going to get something from a QE perspective? Not today. That is not happening today. But remember, Jay Powell and the Fed has been extremely silent over the course of the last 2 months. But what did they do a week and a half ago? A week and a half ago, they aggressively modified the parameters of the Main Street lending program, where only around $8 billion of the $600 billion in that program have been borrowed out. The reason it was just sitting there is number one, you had to get a loan of a minimum of $250,000, and the parameters of that loan, which is non-forgivable, the parameters were quite difficult. They reduced that to $100,000 and made it much easier for small businesses to get loans in the Main Street lending program. That was the first time the Fed had done anything in the last 2 months. Now the Bank of England acts. I've been around the block a time or two when it comes to central bank actions, guys. They don't do anything in a bubble singular to themselves. I expect Jay Powell today to hint towards the furthering of QE, especially if we do not get stimulus. The market is starting to believe in that theme developing, and it's going to be an ongoing theme. As I said yesterday, it's going to be an ongoing theme. You have the foundation of it, but you start making modifications. Today's that first modification. We're looking at the market focusing on earnings a little bit, and we're looking at the market focusing on what Jay Powell is going to say, and is he going to say something very similar to what the Bank of England did today?
You know, Mark, you've had a really good feel for these markets for quite some time. I think the analysis from both of you guys has been point on for several months here. And you were a little bit cautious coming into the election. The market did price in some of that caution, wasn't buying up the earnings, brought it down to support. Now we've stuck support. We're starting to rally. We're above these moving averages. And these themes Matt is talking about, they're starting to develop in the consciousness of investors and traders. How are you reading this right now? Because I know big upward movements, they're not going to get you all confident usually, but how are you reading this?
No, I've had a really good feel for the last couple of months, from the blow off, from the shakeout that we saw in August to not trusting the rally in October, and my feel in reading the sentiment, because like right now the narratives out there are like, what is the new narrative? What is the new theme in the market? And if Jay Powell comes out, and if Matt's right, and he clearly states, or at least makes it between the line,
Yeah.
that there's QE, then you're going to be at all-time highs. And if he doesn't, well, you could probably have some choppy action. Now, the variables in play for me. Now, if he does that, and it's one of the reasons you're seeing Bitcoin running, and it's one of the reasons you're seeing gold running, and it's one of the reasons you're seeing stock running, risk assets, let's party in QE, because we got a 10-year playbook on what QE means to market sentiment. We don't have to guess. We don't have to speculate. We got 10 years of data.
Yeah, just make it simple. QE's bullish.
Yeah, it's bullish, and it's not only bullish, it's stabilizing bullish. Now, that doesn't mean, right now the market's in a drunken orgy in this volatility. Things are going crazy. But it's like in 2017, we've seen some really nice stabilizing trends. When you've had QE support, so we know what the market reaction will be. And in the short term, because things are so crazy, you might see a blow off top and then stabilize and then maybe form a trend, especially if Matt is right. If Matt is right on his 1-2, Jay Powell QE, Mitch McConnell comes in.
Backstop.
If that's right, then you're going to see all-time highs by the end of the year, and you're going to see stabilizing. It doesn't mean the market's going to go up 47%. People need to get their expectations.
Well, and Mark, my thesis doesn't mean the market's just going to go up and up and up and up. We got technical resistance zones, and you got a lot of speculation that we need to have, verified to a certain extent. And we're still in the middle of a vote count that is ongoing today in multiple states that could have a massive say in the election. And we haven't even started about the potential of these lawsuits that the Trump administration is filing in the states of Michigan, Wisconsin, Pennsylvania, Georgia, Arizona, and now Nevada.
Yeah. So I got a 1, 2, 3 worry wall. One, fiscal stimulus. Now, every time Mitch McConnell opens his mouth and says something positive, that worry just was like, oh, okay, I'll worry about that a week or two from now, because that's the key.
Speaking of McConnell, Mark, what is your read on McConnell today? Because before the election, He wasn't all over a 1.5 trillion stimulus. He wasn't at the 1.8 trillion. He was stuck at that $500 billion. But
listen, and I know my Democratic friends are going to be really upset when I say what I'm about to say, but McConnell's becoming my new Steve Mnuchin. I love the guy more and more, and I know that's going to drive liberals crazy. And if I'll find a liberal.
He is target number one.
You know, like, and listen,
I'm not even sure Trump's target number one for the Democrats. It might be McConnell.
But McConnell is, he is a stone cold killer. He's pragmatic, but he's also practical. And McConnell has a lot of Wall Street friends. He knows that it needs stabilizing. He's very, very smart. McConnell is
one of the best political operators out there.
Like, seriously, in my lifetime, you know, and so I see McConnell reading the tea leaves, and I see McConnell knowing that he has a smaller majority than he will have before the election. And so
he has little wiggle room.
He has very little wiggle room. He can't just say, no, we're not going to do it, because he gets two people to flip in a Biden presidency.
2010 through 2016.
And so he's very pragmatic, and he's like, let's get a deal done, because I don't have the votes to hold on. I have to hold 52, which will include Susan Collins, which will include
the Georgia runoffs have a big say about that, Mark. Those Georgia runoffs are going to be, if you think the political theater in the presidency has been fascinating in the last 3 days, guys, wait till January and those Georgia runoffs for control of the United States Senate.
Mm-hmm.
Yeah,
that is going to be ridiculous. They're going to put hundreds of millions of dollars into those campaigns, guys.
Mm-hmm.
So McConnell knows that he can't, like, just say, no, we're not going to do nothing, or 500 billion. He's pragmatic, and he realized something get done. So I would expect the 1.5 to 2 trillion like you're expecting. I think that deal gets done. It might get done sooner than later. So that's not my really worry. Now, we do have this whole contested election, which was like every bank in the world said this is just the biggest worry in the whole world. They have been dead wrong. And I wasn't as aggressive heading into the election because of those worries. Now, I still held my high conviction positions. I still have a lot of Bitcoin, and I'm very, very happy about that. We'll talk about Bitcoin in a second. And so that is playing itself out, and those could provide some landmines. I don't worry about them as much, but they still are there. Really, for me, it comes down to Powell. It comes down to Powell, and we get that piece of the puzzle today. And the one thing that has me very cautious right now, now I've started to do my low-level naked puts over the last couple of days. You know, I'm very excited about Bitcoin and gold right now. If Powell comes out and gives the market what it wants. The one thing I said in the Sunday prep for the week, I was like, all right, we line up the week, we have the election. Jay Powell could be the swing vote. And I said, what I worry about from getting too excited either direction, if let's say the market tanks after the election, well, Jay Powell can come in to save the day. And I was like, what if the market ferociously rallies after the election? Well, Jay Powell can be there to throw cold water on it. So we knew Powell was going to speak this afternoon, and we're going to know here in a couple hours. We knew he was going to speak. And the one thing I worried is that any large move, Powell was going to be there to be the buzzkill for a rally, or be the buzzkill for shorts if things were getting out of hand.
And Mark, as we are approaching this 35.50 resistance level after the market's up really healthy over the last 4 days, especially the impressive stock run up we've seen, post election here, or election day, I should say, the market's hesitating. And I believe the market is hesitating for exactly what you just indicated. Here's the overnight action, right? This is the market closing yesterday. Here's the overnight action. Here's the action from the European Open all the way through the cash open here today. You really haven't done anything. You've had a lot of run up over the last couple of days in the marketplace. But today, even though we have a nice little big green candle and the market's up 2% today, a lot of that was on the overnight action. You've had practically nothing since the cash open here. So I think the market is hesitating. Now, obviously, as these themes develop, there's going to be a lot of variables. No doubt about that. There's going to be a lot of variables. But I do think one of those very important variables is the Fed, is J-Powell later today. We have an hour and 4 minutes before monetary policy is released. I don't think that's a market mover here today, because I don't expect the Fed, and I don't think the market expects the Fed to actually do anything today. It's widely expected to maintain zero interest rate policy. But what do they say during that press conference?
Yeah, it's always the press conference,
important.
right? It's
Yep,
always
that's what's important.
Conference.
And he's going to be asked on, fiscal stimulus. And with what the Bank of England did yesterday, he's going to be asked about quantitative easing. The Bank of England, the guys, they didn't dip their toe in. They increased their QE program by 150 billion pounds. 150 billion pounds. They increased it by over 20% in preparation for a potential double dip recession in the UK. So if you're looking at that, he's going to be asked that question. And so that's why I say I expect him to answer a question today on what England did, on further QE potential, and that interpretation of that answer is going to play a significant role in the theme currently being adopted of potential quantitative easing.
And Mark, can I use an old Matt idiom? They jumped in both feet head first.
They did. They jumped in both feet head first. Boom. now we got to see if they're dead.
And I guess this is
called a belly flop.
How long's Jay Powell been the Fed chair?
Since
3 years,
3 years,
3.5 years,
17,
something like that.
The emperor has been the emperor your whole lifetime, but you just don't know.
It feels that way, right? But and maybe this is listen, I'm always on the side of caution, right? But maybe it's just as 3 years of Jay Powell press conferences, his batting average for sending the market up ain't exactly good.
No, he is not the cheerleader that Bernanke or Yellen was, or Greenspan was.
I mean, he doesn't have a very good. I mean, in fact, we've seen some ferocious sell-offs.
Can I ask you a question? And this is pure speculation, but Cody and I have long held the belief that Jay Powell is a hawk. In his heart, he's
I believe
a hawk.
that in his heart he is. That's why I hate him so much.
Absolutely hates doing what he is doing, and so he just doesn't have a good poker face. And so you can just read through the cringing statements sometimes. And so I think the market picks up on that a little bit, that, we're going to potentially be, hypothetically, I don't want to do this, but we're going to be doing a further quantitative easing. I know it sucks, guys.
You can see his body language when he does it. He's like, what we're going to have to do.
It's like you're delivering bad news to a friend.
Well, and to that point, when is his body language?
There's a car crash happening. How are you going to deliver that news?
His body language is the worst in those pressers when he's talking about the virus and COVID. I don't see Jay Powell throwing cold water on this one, Mark. I just don't. With COVID cases where they are, the Fed has been tracking that. In fact, that wasn't his quote. The virus sets the timeline as well. He reiterated what Fauci had said
regarding the economy many times.
So I just don't see it. I mean, obviously we have an event here today, and an event can create volatility. We know that. But I firmly believe the Fed's going to come out and be soft.
I mean, this is how I practically look at it. Because at the end of the day, all we care about is making money, right?
Yeah.
And I have exposure more than I should to Bitcoin and gold, perhaps. If Jay Powell comes in and says QE forever, something like that, blah, 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 Bitcoin and gold are going to do really good. If he doesn't, everything might get a little bit of hit. And so it's about
I want to question either one of those, though. The Fed's not going to say anything today that would get you off, your gold trajectory over the next 5 to 10 years. No, there's nothing the Fed will say.
And so I guess I have if he comes out, and this is why I'm not smashing the equity buy button today. I'm doing my lame make money, low level naked puts, a little bit of exposure. That if he comes out and he says, I'm going to be happy because I'm going to make a little bit of money. I have some long exposure in some equities. I have a lot of naked puts in equities. I definitely have exposure to Bitcoin and gold. And so if he comes out and says QE, great, I make money. I don't have to make $1 billion tomorrow. Responsible investing. Like the only thing I worry about right now is not for me because I'll be fine, but like individuals out there in our community that are like, I'm smashing, I'm full margin, everything's great.
I know, but that's not our community though.
You know,
Our community is not smash the buy button.
I'm just worried about one person, you know, like, because it's like
I worry
yes,
about
it's a
that
whole.
person too, Mark. But our community is not the demographic that follows Davy Day Trader.
I know.
Our community is not the demographic that over leverages themselves and makes stupid choices like that. Our community is practical, long-term, get that dialed in, take selective trades, be conservative, position size appropriately. Our community is chock full of amazing traders, great investors, people that actually have put education before application. So I get the disclaimer, but that is not our demographic at all.
And speaking of our community, I just have to throw out another thank you to Dina, who just sent me a Naked Puts Rock.
Dina's
song,
all over the chimes there.
A song to Jingle Bell Rock. Naked puts rock. Naked puts swing and naked puts ring. I'll sing the whole song in it. It's very cute, Dina. I appreciate it very much.
This is becoming like a concept album. We could put out a Christmas record, guys. I mean, we can put enough songs together. I think we might be able to put out the old Christmas record. Dina,
here's my favorite verse of the song she sang. What a bright time. It's the right time to trade the night away. Naked puts time is a swell time to go commando in a multi-stock raid. It's just a great song, Dina. Very well done. I mean, very well done.
I am going to sing Delta Baby on the halftime report when it's actually Christmas season. It's
very well done, Dina.
Oh, dude, you sang it in October. You can sing it in November too.
No,
don't start drawing a line now.
God said we have Thanksgiving to
go commando in a multi-stock raid. I gotta get the raspy voice to do this one. That is a great song, Dean. Made me very happy. Thank you very much.
Yeah. I got one quick question for Matt before we go on to gold and the crude oil. I want to look at the commodities here next, but back on the market for 1 second, Matt, ES or the NQ, I don't care which one, kind of very similar in the analysis to me. Long-term chart, weekly chart. I mean, if we do get rallies above these resistance levels, 35.50, 35.87, can you see a Christmas rally developing this early in the cycle?
Well, I said a week and a half ago as the market was tanking that Santa got COVID, and apparently Santa overcame.
He recovered.
Santa might have got the same cocktail that Trump got. So Santa's ready to rock and roll. He's got the B12 shot ready to rock. I'm not saying he's on steroids. We'll just let other people speculate on that. But Rudolph's getting ready. You know, all those other reindeers. I can't remember the song off the top of my head. So let's just say Rudolph's going to lead the charge here. Rudolph's getting ready. Santa Claus is coming. Santa Claus over COVID. We'll see if he can see some follow through.
Yeah, I'm looking forward to that if we can get the fall through. Obviously, a lot between now and then. Let's keep working.
Could you imagine a market that adopts the theme of quantitative easing, fiscal stimulus, positive earnings growth, and a COVID-free Santa?
Well, and the other one, Matt, infrastructure. I really.
Well, that's all down the road.
Even if it happens down the road, I actually think there's some.
You open up that risk graph.
Look at XLB.
You open up that risk graph hard.
Look at materials today.
Dude, you're front running on that one, buddy.
I understand.
Yeah, you open up that risk graph hard.
Dude,
no. If infrastructure, Tim, I absolutely believe infrastructure is in play for 2021, and I believe that regardless of the presidential scenario.
Mm-hmm. Mm-hmm.
Good. And maybe it's just me, but I actually could see a post-election next 4 years where a very close House and Senate actually tries to get some business done.
Mm-hmm.
Maybe I'm the only hopeful one in America. I don't know. But McConnell has indicated in the last couple of days he's more willing to discuss these types of scenarios.
I love his direct quote.
I don't know.
I mean, this is exactly what he said, direct quote. Hopefully the partisan passions that prevented us from doing another rescue package will subside with the election.
Okay.
Priority.
And put your personal opinion aside of McConnell. And I'm not talking to you, Tim. I'm just talking in general.
Yep.
Isn't that a truthful statement we want all of our politicians to say right now?
Get over the politics.
Whether you agree or disagree with their individual political beliefs?
Yeah. Get back to
Absolutely.
work. Get back to work.
Absolutely.
Absolutely. We got a lot to go through as well. We got a lot
Yep.
of earnings reports down the road. So let's go through commodities real quick. We did take a peek at that gold chart, but honestly, I think we got to spend a little bit more time on it.
Gold is confirming.
Man, you got to love this. If you have been waiting for gold for quite some time here, it's been consolidating. The weekly chart, in my opinion, is a beautiful thing. We got a breakout on the intraday. We're pushing on the daily. The weekly chart candlestick is getting above its congestion. Matt, is there anything I need to be aware of here that would throw some cold water on a bullish analysis here?
Well, yeah, anything can throw cold water. We're dealing with unprecedented times of uncertainty. Yes, anything can happen. We're living in the moment of variables evolving here. But, what you're seeing in gold from a technical perspective is you're seeing that breakout we talked about, right? We've been talking about this potential breakout for about a week and a half, 2 weeks here. Let me draw the trend line very quickly so you can kind of see what I'm talking about. You had that nice little trend line on the downside on that daily chart. You see a pivot, 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 pivot. When you look at this on the weekly chart, you see that a little bit more tightly here where it just holds that trend line coming down, 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 down. Now what's happening? You're breaking out of that. Look at the horizontal support level here form right north of 1850. Look at the vertical trend line pushing down. Pressure being put on support nonstop over the last 3-4 weeks, guys. Pressure, and that's the thing that people don't understand a lot right now, is that gold has been playing some very impressive defense from a technical perspective. You've had a downward moving trend line pushing against that horizontal support level. Gold has not broken that horizontal support level. The ranges get tight. Now, I'm not the biggest fan of symmetrical triangles, but that's not what this is. Symmetrical triangles is an increase in resistance and an increasing in support, creating a volatile condition. Here, you have a horizontal area of support with resistance pressing down. The pinch probability actually drives to the upside here. Technically here, I am calling this confirmation. Now, on the weekly chart is where that confirmation lives. We still got tomorrow. And a major, well, I don't want to say major. Let me just say a very important type of discussion later on today with Jay Powell. But why is gold breaking out here? This is why you're starting to see the QE discussion in the financial world, guys. I talked earlier today about the Bank of England, okay? What did the Bank of England do yet again? The Bank of England reported a massive increase in quantitative easing today. A massive increase in quantitative easing by upwards of 175 billion pound type increase, which would be over 20% against what their total is. When did gold start running? On that announcement. Look at gold start taking off on the Bank of England. Right here, Bank of England starts making that announcement. Gold starts dramatically moving in front of the announcement. Announcement continues to drive. Now you're high basing, literally waiting for the Fed to see if they're going to indicate. And so when we saw gold break out on that type of news out of the Bank of England last night, you're seeing this as confirmation. You're looking at this on the daily chart and you're saying, okay, is it time to go on gold? And the answer is most likely yes. Now, the individual investor is the one who has to make that call. For the long-term investors, they're looking at gold right now. They're saying, yeah, of course, that's what gold's doing. Central banks around the world are losing their bloody mind. And that's why I said to Mark earlier today, don't question your analysis on gold. You're not holding here for today. You're holding for 5 to 10 years for an inflationary purposes or economic reasons. What you're looking at today is for the people that are not invested in gold, that missed out on the massive rise in gold not this year, guys. We called gold bullish all the way back in October of 2018. We said that was the time to go. Everything since that moment in time has just been a continuation of that philosophy in October of 18. You're seeing, and the gold bugs today, the long-term investors, they're saying nothing to see here. This is par for the course. This is why we own gold, because central banks that are ran by Carney and central banks that are ran by Jay Powell and central banks out of Japan that are ran by Corrado, those central banks have lost their collective minds. This is the continuation of that. Investors never got out. Investors in gold don't get their faith in gold shaken, not in any capacity. It is the individual who missed out on this run. They're looking at this today and they're saying, is it go time? Now, guys, the answer is most likely yes. That is the most likely answer. I still believe, though, technically you're seeing confirmation. I got to see what the Fed does with Jay Powell here in about an hour and a half tonight. So I do think there's a little bit of front running on gold going on right now based on what we saw with the Bank of England. Let's see if that trade can continue with the FOMC later on today. Now, the second thing I'll say about this on gold is not in the actual spot market on gold, but let's come into GDX here. GDX is the gold miners ETF. It's chock full of all of those miners like Franco Nevada Gold and Royal Gold and Rand Gold and Barrett Gold and all these gold mining companies. It's a very, very popular ETF to invest in and trade or cash flow. It's an ETF that really can be used for a lot of different purposes. But the reason I bring this up is you're seeing the same breakout on the same technical conditions in GDX that you're seeing in gold. Now, you have some correlation stuff happening right now where you have the Bank of England in the gold market. What do you have in this ETF? This ETF does not have to trade in line with gold. It goes in the same direction typically as gold, but they are not one-to-one correlated. What's happening in GDX today? Well, what's happening is you have Franco Nevada reporting earnings today. You have Royal Gold reporting earnings today. You have Pan American Silver Company reporting earnings today. And you got the big dog Barrett Gold also reporting today. So let's talk about the equity positions within the gold market for just 1 second. Let's start with Barrett Gold, and I do want to get Mark's take on Barrett Gold here. First and foremost, Barrett Gold comes in at 41 cents a share versus the expectation of 32 cents. They came in above revenue expectations of 3.5 billion versus 3.4 billion on the expectation. A fairly healthy beat on EPS numbers, slight beat on revenue numbers, kind of goes in line with that market theme on earnings we've been talking about in recent history. Barrett Gold also sees a 37.2% year-over-year increase in revenue, did very well with the increase in gold prices over the course of the last year. We know physical gold ownership has increased over the last, ever since post-pandemic and Fed losing their bloody mind earlier this year. So obvious we're going to see that increase in revenue, but I was very impressed with a gold stock coming in like a high-flying growth stock with 37.2% increase. But that, to me, is not the biggest news of Barrett Gold today. The biggest news of Barrett Gold today is a massive increase in dividend by 12.5% there. So not only did they destroy EPS numbers, beat on revenue numbers, come in with a very, very impressive growth number, they also gave it back to the investors with an increase in dividend. Mark, what's your read on specifically Barrett Gold, their earnings numbers, but what it means to the investor class when they see a nice little healthy dividend increase?
First of all, I want to comment on gold in general. I think, listen, you have COVID lockdowns in Europe. And you got COVID lockdowns in Europe. This is also triggering monetary policy, which is just, listen, if you get something out of Jay Powell today, gold, you need some exposure. Now, maybe it's through an individual stock like Barrick. Maybe it's a cheaper stock like AUY. Maybe it's an index GDX. Maybe it's gold itself. But you do not want to be covered in this environment. And what I say by that is if you get positive Fed speak today, those covered calls, which I'm a huge proponent of, right? You're on a technical signal with a sentiment catalyst. That is a boom combination in 2020 in any asset class. So price appreciation over cash flow, if you get Powell confirmation, it's a beautiful potential environment.
You want to unleash the Kraken.
Listen, you don't want to have it is an unleash the Kraken moment. It really is. And I'm not one to really say that very often, right?
No, you're not.
but you have it's a combination of sentiment, fundamentals, and technicals. I mean, that's the trifecta of freaking
And
goodness.
it does rely a little bit on what, because we are
Oh.
hesitating. The market's hesitating, gold's hesitating a little bit,
all
GDX
J-Powell.
hesitating a little bit. We are relying on
It is-
J-Powell here today.
This is J-Powell, which we're going to know in what, an hour and 20 minutes, right?
Yeah.
And even if, let's say, there's some election uncertainty, right, coming up, that's probably a good thing for gold on top of relentless monetary support from around the world. And so your individual stocks, because not everyone can afford, you still don't want like 80% of your portfolio, 50%. It comes down to proper portfolio management. But go find one of those gold companies, which are traditionally dividend payers, healthy gold environment. Not only are you going to see price appreciation, you also got that back end cash flow. And let's not forget on GOLD, Warren Buffett might have bought some a little while ago.
Might have bought some.
I mean, that
Might.
remember that. And now people are like, oh yeah, I remember
Buffett.
that Uncle Warren bought some gold.
Buffett.
And he specifically bought Barrett Gold.
Your hatred of all things gold for 20 consecutive years, and now you buy it for the same reasons they held it for 20 consecutive years.
Like whatever that responsible number is, having exposure to gold, which we have all universally at Tackle Trading been advocating to our members since the start of 2019.
We're believers in gold.
Yeah,
right.
And we absolutely are, and we are now, but gold doesn't have these like potential line it up fundamentals, sentiment, and technical catalysts. We're about to experience one. You'll know before the end of market.
I think
what
so.
does gold do? Because J-Powell speaks at what, 2:30 Eastern, so here in about an hour and 10 minutes. So you'll know before the end of the market. I know.
And this goes without saying, guys, we're not talking a swing trade here.
No. Swing.
That's not what we're talking about.
This is position
We're not talking
long-term
a day
or
trade
investing on gold.
There are better swing options and there are better day trading options. Every analysis, when you look at a weekly chart, and that's part of your analysis, you are absolutely looking at a position trade or some type of investment thesis in that capacity. But I want to play the game with you guys. I got quite a bit of gold stocks to analyze here, and I'm just going to pick the ones I want to analyze. But I got FNV, Franco Nevada. I got Royal Gold, RGLD. I got Pan American Silver Company, and I got Barrett Gold. So I got mostly gold, one silver company here today.
Did these all have earnings, or
they all had earnings today? So what I'm going to do is I'm going to do a little bit more of a detailed game. Okay, so I'm going to give you my analysis from an objective perspective. Obviously, that's how you should always analyze. I'm going to give you the raw numbers on earnings, and then I'm going to break down the technicals. And what you two are going to do is you're going to tell me which one that you like the most. Fair enough?
I like it.
Okay, we already talked about Barrett Gold from a fundamental earnings numbers perspective. Beat on EPS by about 25%. Revenue came in slightly above. Really, the Barrett Gold assessment is really about that increasing on the dividend plus the increasing on the growth. Both of them are very impressive. Barrett Gold, very similar to gold, though, has been stuck in the mud a little bit on this weekly chart. You're really looking at slowing momentum in Barrett Gold from a technical perspective. You're looking at some degree of neutrality here. And even though I don't see it, like if you're looking at price appreciation analysis, cash flow analysis, you can do whatever you want on this company right now. But when you're looking at price appreciation, you're not touching this underneath that 30 handle. You need to see 30 reclaimed on that weekly chart. We have not we've seen wicks, right? We've seen wicks, but we have not yet seen a weekly close above $30 here. I am looking at a Barrett Gold here. Love the earnings assessment today. Love the price movement here today. But I'm saying, give me a weekly close above $30. That's the analysis. So that's number one. Let's take a look at Franco Nevada here. Franco Nevada Company. FNV. Now, Franco Nevada is in a little bit of a different technical pattern, more of a bullish retracement on Franco Nevada here from a technical perspective. Very similar horizontal support, very similar breaking up above those moving averages on the weekly chart. When you're looking at Franco Nevada here, you're looking at a stock that really kissed off its 200-day moving average just recently. Now it's back up above all those moving averages, broke out out of that same range that gold was doing here. So with Franco Nevada, I think you're looking at this a little bit more of a support bounce off that 200-day moving average. You look at this on a weekly chart, you're looking at this more like a bullish retracement with confirmation here. Now let me give you the numbers. Franco Nevada comes in at 80 cents a share versus the expectation of 59 cents. Franco Nevada comes in at 279 million. They're a much smaller company than Barrett Gold. Barrett Gold is kind of one of those big dog players in the gold mining industry. Franco comes in at 279.8 million versus the expectation of 246.1 million. So a nice healthy beat on EPS numbers, fairly decent little beat on overall revenue numbers. Revenue was not up like Barrick, but you did get that 18.7% year-over-year growth there in Franco Nevada. Now let's take a look at Royal Gold, RGLD here. Royal Gold, very similar to what you're looking at, a little weaker technically than I would say Barrick Gold. I would put Franco's technicals up there with even above the current price action on Barrick, although I do really like the potential breakout on Barrick Gold at $30 with the close above that. On Royal Gold here, you're looking at a support bounce on that weekly moving average of 50. That does have a tendency to coincide with the 200-day moving average. It's just math. You're looking at some degree of consolidation in the last week and a half, 2, 3, 4 weeks. You're looking at that as a potential confirmation above 126. You're back up above the moving averages in that capacity. The weekly chart, really, really, really stagnant, but you're at the low end of that weekly chart. The value investor who likes a little bit of depressed price action, likes to come in at that 200 simple moving average. So here's the numbers: 82 cents on 80 expectation on EPS. Revenue came in at 146.9 million. There was not an expectation there to judge that off of. Revenue went up 23.7% year over year. The last one is a silver company. And before we take a look at this little silver company, let's take a look at silver on the chart here, breaking down this daily action. Silver is fighting for confirmation. Now, whereas gold is confirming, that's the QE play. The QE play is always gold, guys. That's the QE play. The silver play is more of an economy reopening up play. Splash on a little bit of the QE play on top of that. That's why you're seeing a little bit of underperformance overall from a trend perspective on silver versus gold. You're seeing a lot of aggressive price action here today, threatening that potential breakout right here at the double top at 25.50. Yeah, it's right where the 50-day moving average is as well. Some people would look at that 26 level and say, I'd wait till it breaks back above 26. You'd be front running, so let's wait for confirmation. The same rule applies, no front running yet. So let's wait for that confirmation. That's what we're looking at on silver. On the weekly chart here on silver, the volatile snapback retracement, but it has been very impressive on that weekly moving average. Look at that as confirmation. If you do get above 25.5, that's a short term. That'd be an aggressive trigger. If you're looking at more of a conservative situation, let's see how it performs at 26. But if we reclaim 26, guys, I think 28 and 30 very, very, very quickly is what we're going to be talking about. Now on to Pan American Silver Company here. Pan American Silver looks at this as a bullish retracement, stagnation over the last 4 to 5 weeks. When you're looking at this on the daily chart, what you're going to see is a double bottom right there at that $30 mark. Double top right here at 34.5. You're looking at that as a potential breakout here with confirmation on Pan American Silver Company. Now the numbers here. Numbers, 34 cents versus the expectation of 34 cents. Revenue came in very, very, very big miss. 300 million versus the 416 million in expectation. Silver, Pan American Silver revenue down year over year. Silver has not had the boom that gold had, where Barrett Gold, Royal Gold, as well as Franco Nevada, they all cited the increasing price of gold as one of the reasons they had impressive earnings reports. Pan American Silver doesn't have that necessarily. Pan American Silver had 14.7%, but technically here, you would say Pan American is perhaps maybe right there in line with the Barrett Gold breakout of 30 or the support bounce off the 200-day on Royal here. With that analysis over, guys, which one?
Mark, you want to go first? Or you want me to?
Yeah, I'll go first. Listen, I'm going to make it real simple for me. I'm going to trust Uncle Warren to have done my fundamental. I have a crack team of very high-paid people that Warren Buffett employs. They've done my fundamental analysis.
They're not better on analysis on gold than we are.
Yeah, well, no, they're
They're
not. But I am going to trust the fundamentals that they examine because they're really, really good at fundamentals. And so, give me GOLD.
Okay, give you Barrett. Tim?
I thought Mark would pick Barrett, by the way, mostly because of the option liquidity for cover calls and cash flow.
It is better for cash flow.
It does have the best options. First off, I'm going to throw Pan American Silver out. Not that silver can't get cooking and hot and all that kind of stuff. I have a belief more in the QE part of the fundamental argument than the reopening theme of the fundamental argument. So I'm going to say Pan American. Nothing wrong with it. I like the technicals. It's got that.
The technicals are good, guys.
It's really clean. Absolutely. And they do have some gold kicker in their numbers. They're not 100% a silver company, but
they got a splash.
Predominantly silver, you know. But I like it. I like that one, but I was saying no to that. I'm going to say no to Barrick as well. I like that 30 breakout if it can develop. No question about that. It's got a lot of long-term congestion at that zone. And by the way, even you know, some old stuff like 8-10 years ago, which may or may not come into play, but around that 30 level, I think the Franco Nevada chart, when I look at the monthly candlesticks and I look at the real big picture, long term, give me like 10 years weekly, something. I love that pivot off of support. It stuck it. It had great numbers. They both had great numbers from what you were, breaking down the numbers, man. I appreciate that. But I like this clear air back up to resistance in play, probably from a technical perspective, coupled with the backdrop of the fundamentals.
Let's throw it out to the team. Okay, team, you got Franco Nevada, Royal Gold, Barrett Gold in the gold. You got Pan American Silver, and Tim, you do. They have a kicker. It's kind of how I like to take my bourbon. On the rocks, splash of Coke. Pan American has a splash of gold. That's how it works. So in terms of that, yeah, I get it. I don't disagree with either one. I like Franco Nevada's technical chart. I think the best, highest probable setup is Barrett Gold on a close above 30. But you got to be a little patient for that to develop because you got a lot of chop between 30 and 31 and change there. So you got to be a little bit more patient there. I honestly though, personal opinion, and I didn't ask this question, I think GDX is the best of all of them.
Yeah, just playing the gold miner ETF. Yeah.
I personally, if I had to pick the equity, I'd go with Mark. I'd go with Barrett. The couple of the fundamentals with what what we're seeing in gold today, and Barrett doesn't have the cleanest chart, but again, there's a lot of chop between 30 and 31, but a weekly close above 30, I think, is significant there. GDX is probably the clearest of all of them, to be honest with you.
And if somebody wants to pick GLD, I would not ever fault.
No, GLD, if you're looking at playing the spot, GLD is beautiful on the chart.
Yeah, it's looking great. I love the breakdown, love the analysis. Looks like the team is predominantly saying Barrick Gold here. Got a couple, well, actually one, Greg is saying FNV as well.
FNV's good.
Yeah.
FNV's good, but I just think Barrick is of that bunch, because those are the ones that report earnings. That's not the only gold stock out there. There are some very, very cheaper plays that people don't like the FNV play. But I just think for the ETF of GDX or GLD, for people that are newer to the market, is probably preferred. GLD's chart looks just sexy as all get out here. But in terms of the actual equity position, Barrick is one of my favorite gold stocks.
Yeah, I love the analysis. By the way, a lot of this is prompted based on the fact that we're going to have a Fed meeting here. They're going to have that, press release here in 30 minutes, conversation from the Fed also with their press conference after that. We're going to get a lot of clarity. Love the earnings breakdown as well. I see James talked about Bitcoin in the chat. Matt, you're bringing that chart right up, and I think it's a great one to go to next. Bitcoin, I mean, we're pushing 15K here, guys. It held up so nicely. Matt, you've been analyzing this spot on. As good as your analysis on gold has been, I think Bitcoin, you could argue maybe even better here recently. It's had this developing trend, developing technicals, the sentiment behind it. Mark, you've been all over that as well. Guys, now what? Now what with Bitcoin? We're 15K. We've run pretty aggressively here. I love it. I'm
gonna
not
take
coming
a
off
second.
of it.
If you are not a pro member out there, I mean, we give our all at the halftime report. We say what we're thinking. We don't hold anything back. Now imagine getting that type of analysis as a pro member constantly from our coaches. If you're not a pro member, sign up for a free trial. You'll be very happy you did. Go to tackletrading.com to the store tab, sign up. Yeah, I mean, we haven't been talking about Bitcoin at all in the last month, have we? Right? Listen, this thing is a blowout top waiting to happen. Give me some PAL confirmation.
Maddie, what are you reading here?
I think you got to get ready for the roller coaster. I do. It's going to be volatile, and there's not a lot of air until you hit 16, but above 16, there's nothing to 20, and I don't think it's going to be a straight shot to the moon. So if you're new to trading, guys, this should not be what you focus on.
Hey, could we pull up the Bitcoin?
Let me be clear. Let me be clear. This is a big boy scenario. Billions and billions and billions of dollars going to be fought for in the Bitcoin market. This is a big boy scenario, right? And if you don't have the thirst for risk, go buy Coca-Cola, get into some value plays. We're starting to see them come back. Get into some gold plays for safety. Don't touch the crypto space. But this is what we've been talking about. We've been talking about the potential of massive volatility increases above that 14,000 level. This should be nothing shocking to anybody out there that has listened to any halftime report in the last 2 months. We've been talking about this. We've been breaking it down from a technical perspective, and you are going to be seeing some violent volatility in this market as the buyers fight and who wants to lock in profit. Okay. I don't see people coming into the crypto space and massively just selling here, but I do see a volatility rising as Bitcoin fights for that 14,000 level. And much like the presidential election, you should not be calling this too soon. A one-day price movement, yeah, Bitcoin lovers are going to like that. But you're going to see some profit taking. You're going to see a battle here. So if you don't buckle up, get out of this space. But I love it above 14,000. It's an aggressive financial instrument. I love it above 14,000. I think it's going to be volatile between 14,000 and 16,000. Above 16,000, I think anybody looking to sell this gets out of the way. And at that point, you see that blow off top to 20. So could that happen for the end of the year? Absolutely. I expect massive volatility here, but it is a big boy trading environment in the crypto space right now.
No, and the biggest risk you have as a Bitcoin right now is the same risk you had 3 days ago before the election. If the market turns risk off, and I'm talking risk off attitude, Bitcoin is going to, you see that big green candle, you're going to see a big red candle, and you might see a couple of those big red candles, depending on how this is. Bitcoin right now for me is the ultimate risk on play. And the ultimate risk on play also carries with it, as Matt said, the ultimate risk downside. So it's just what's your exposure, and what's it going to like anything, right? You should only have a certain percentage of your account in any given risk asset. But I really see Bitcoin trading with the Qs right now more than ever, with exacerbated moves. Qs up 3%, Bitcoin up 6%. Qs down 2%, Bitcoin down 5-6%. I think you're going to see exacerbated moves on Bitcoin compared to the Qs. The gains could be bigger, the losses are going to be much bigger. So it's going to be a wild ride. Does anyone remember?
It's going to be fun though, Mark.
Does anyone remember, because Bitcoin futures, I wasn't following it on its run up to to 20,000.
Oh, I remember it.
But I
remember
so I
it very
don't
well.
remember, and I don't have any context of what that price action was like.
Me and Pete Thomas literally called the top at 20,000 mark on a podcast before he became the producer of the podcast. So
Mhm.
we were all over that. And both of us were extremely hesitant. It was like, Mark, I thought Bitcoin going into the futures market, and all the Bitcoin lovers were celebrating. And my entire analysis was like, you just don't understand Wall Street. You think this is Wall Street adopting it. No, Wall Street's going to adopt it later on. Wall Street's going to release the algorithms. Wall Street has these tools in the futures market that people just simply don't understand. And so Pete Thomas and I were on the podcast, and both of us like, no, this is a sell. This is an obvious sell. We weren't talking about selling your position. We were talking about shorting Bitcoin at the time. And it was very, very volatile, Mark, between that 16,000, when you look at it from a longer term perspective.
Yeah, we don't have the futures
price
data.
Well, you do. It looked exactly like this on the top side. It went from 2,000 in I believe February that year to 20,000 by November, and then you saw this. And so that's why a lot of people, including myself, look at this level at that 14,000 that acted as support. Look at the consolidation right north of that 16,000 here. And that's why a lot of people believe that 14,000 breakout doesn't have a lot of technical resistance till you get north of 16,000. North of 16,000, 16 and change, give it 16,500. You don't have anything until you get into that 20,000. And even if you were analyzing crypto charts before this in the futures market, you will see there's not a lot of major resistance between 16 and 20,000.
No, because that was a blow.
Isn't.
It was a blow off top.
It was a blow off top.
In
Mark.
July of that year, 2017, Mark, Bitcoin was at 2,500. In October of that year, Bitcoin was at 5,000. It broke out. It ran to 20,000 by December.
It was insane, Mark.
And then
if you think today is positive for Bitcoin, oh no. It had this times 3.
Mm-hmm.
Like, it was ridiculous. It was going up thousands every day.
This is nowhere near the market condition that was. Not even, and not the same fundamental.
Oh, are you kidding me?
Sentiment around it, not even close.
If you want to compare the bullish nature of this market versus the bullish nature on the blow off top in 17,
yeah,
you're undervalued right now.
Yeah.
Listen, the one thing, and listen, learn lessons. Blow off tops have not been healthy in 2020. They always get what?
They can be in the short term.
Oh, in the short term, yes.
Yeah.
But if you're the one that this is going to the moon, I mean, look, the
They're
blow off top on gold, the blow off top on the markets, the blow off top on many they're not sustainable. And when you have that correction, then it can be pretty massive, right? Like, listen, if you get 2, 3, 4 candles like this, man, I don't know how you don't take some profits in that situation.
No, I'm with you, but I look at Bitcoin here, and obviously it's a far more popular trading vehicle today than it was 2.5 years ago. You're looking at Bitcoin today, and Mark, I like when gold was blowing off its top. How many times, literally in the halftime report, guys, was I saying, this is insane. I hate this. I don't like this. No, this is nuts.
That's how I feel about it. If we have some follow through on Bitcoin, that's how I'm going to feel. I'm like, gosh.
I totally get it, but I don't see it as a similar vehicle. And so when I'm looking, because I have no interest as of right now in investing in Bitcoin. I don't. I don't have the fundamental belief that you guys might have. I certainly don't have the fundamental belief Tim has.
Have fundamental belief.
Mark, I don't believe you have fundamental belief. I know Tim has. Yeah. Tim has fundamental belief, though. I don't have that on Bitcoin. I have Bitcoin from a technical perspective. I'm not the guy who's like, Bitcoin's going to take over and be the next world currency of the world. No, I'm not that guy. I don't believe that. I think that's foolish. I think that's utterly foolish to even think that. I think the central banks are going to have a massive say in this. So I'm not that guy. I am that guy on gold. And so when I saw that blow off top, I'm like, I hate this. This can't be sustained. We're going to go through months of prolonged neutrality because of this. On Bitcoin, I'm excited as a pig, and you know what? Because I'm not treating it as an investment vehicle. I'm treating it as I just want to make money.
So where's your entry? Let's say like
entry's already done.
Yeah. So
we don't have an entry anymore.
If you are not in Bitcoin assets, where is your next entry? What's the pattern you would like
next,
to see?
honestly, you don't know.
You don't
And
know.
guys, I'm the guy who likes to paint that picture. I'm the guy who likes to say,
That's why I was
okay,
asking you.
watch this, go this, then this, right? No, you don't have that on Bitcoin. I think you got to look at Bitcoin here and you got to be like, I have to assess this in real time. Could we see a high base scenario with a great breakout above 16? Absolutely. Could we see snapback retracement, retesting that 14,000 barrier? Give us that intraday analysis. Absolutely. Could we see a fade action where we see like a 30-minute chart trend line coming down where we pop? Absolutely. You got to look at this from I'm treating Bitcoin entries as day trading vehicles where you carry through swing trades. I think that's the analysis.
Yeah, if you're going to short-term trade it, I would agree with that. I think you got to let the chart just develop. By the
Now,
way,
the investor, Tim, you're the investor.
yeah.
How are you treating this potential of the blow off top here?
Well, I was thinking about reward to risk as you guys were talking here, and we're at 15K. And any Bitcoin investor,
Christian said my words, by the way.
he said, I gotcha. Shitty currency go long. There's my friend, Christian Sisson. Great to see you, my friend. But here's the reality. I am not approaching this thinking I've got to hurry and take profit. That is not anywhere in my head.
Oh no, isn't that the thing? The holders are like, I told you this a year ago.
This is what you love. You love the chart
Tim
development.
did not hold at 3,000 to sell now.
No, I didn't ride through years of volatility back and forth to get rid of Bitcoin when it finally broke out.
When it finally breaks out. Yeah.
I think investors like myself are going to be very patient, very happy, and just kind of watching these charts. Now at 20K, Matt, if you do have a huge run up over the next 3-4 months or whatever it might be, back and forth volatility,
I would reduce exposure.
That would be a different conversation.
It's a different analysis.
But at 15K here, yeah, I do see $2,000-$3,000 risk even in the swings, right? You could easily come back to 12 or 13K. It wouldn't shake my confidence at all. It wouldn't even shake my thinking, quite frankly. So
no, I think if it comes back to 12K, you're still looking at as a bullish retracement on the weekly chart. If it, the $14,000 analysis is the analysis on the daily chart. That's the swing trade analysis. If you do drop back down to 12,000, which certainly can happen, at that point you're looking at this as a bullish retracement coming back down into resistance. I would absolutely love that.
And I want to address something
crazy that the bullish resist. I mean, but that's 2020. The pullbacks, like we saw that in Costco. Some of these great pullbacks are so deep when they occur.
Imagine that level of percentage decline in Apple and still calling it.
It's like, I mean, but you are literally talking about a 20% pullback, and it's still a bullish chart. Yeah. But that's true. That's crazy.
That's what it can do. But that's why I say, guys, this is not an instrument for the faint of heart. No. For the conservative, for the value investor, this is not that. And if this is not you, and you feel your blood getting a little, guys, if you feel your blood pressure rising, you're doing something wrong. That's what you're doing. If you're emotional about this game we call trading, you're doing something wrong. And either one, you're looking at the wrong tradable instrument because it's just simply too volatile for you, or two, you have money management problems, and most likely position size rules are at stake. So if you're looking at this instrument and you're like, wow, this instrument can go 5, 6, 7, 8% a day, and that's too much. Guys, there's a lot of great stocks that trade less than 1% a day that kind of match what the market does. So that's why I said what I did. Yeah, I'm excited for the analysis. I'm excited for what Bitcoin can do above 14,000. I'm excited at Bitcoin at 12,000 because I think that would be a weekly retracement. But we're talking big time percentages moves here. And that's why I said what I did. You're going to be fighting over billions upon billions of dollars, both on the buy and the sell side here. And the sell side could just be when to lock in profit. That's going to be difficult in this environment of volatility. But people who have been preparing to trade this instrument, that have put education before application, can navigate this market like an assassin, they're looking at the crypto space right now and they're saying, I don't care what your belief system in the crypto space, we're seeing the potential of a vehicle that can make quite a bit of money in the short term.
Mm-hmm. You know, we're talking markets. We're working through them step at a time, as we always do here on the Halftime Report. If you're out there watching our show, appreciate you guys. Team Tackle is our official hashtag as always. And if you're watching right now, give us a thumbs up. Let's get the analytics up. Let's get the word out. After Bitcoin analysis here, Matt, just a quick peek of the dollar. By the way, we didn't look. Just a quick peek of the dollar.
You analyze it.
We got a Fed meeting tomorrow. It's just coming back down into a longer, range from my perspective. I don't really see anything to overthink until we see the Fed reaction.
I said this literally 6 weeks ago, Tim. The dollar's going to go neutral over an extended period of time. And any moment since you've asked me to analyze it, what have I said? There's nothing to see here.
Mm-hmm.
The dollar's going to go neutral for an extended period of time. You have central banks now fighting for the bottom. When the central banks fight for the bottom, it creates neutrality in the dollar. So we can talk about the dollar gapping down, but you already did the analysis of gold going up.
Mm-hmm.
$1 trillion question. Can gold and Bitcoin sustain an upward sustainable trajectory without support giving out on the dollar?
Yeah. Bitcoin's
Yes.
been bullish for 2 or 3 months while the dollar's been neutral.
When you
They
look
absolutely
at the dollar, you're seeing the dollar in comparison to the rest of the currencies in the world. That's what you're seeing. When all of the central banks in the world try to race to the bottom by increasing money supply rate, gold goes up and dollar goes neutral. The dollar does not need to go down for gold to go up.
Mm-hmm. Yeah, I agree with that 100%. And I do want to get to some stock analysis here. By the way, we didn't look at crude oil, and we don't need to. There's nothing going on in that chart there
Now,
today.
Mark,
Kind of a
if the
hesitation.
dollar does go down, that should give all of us a greater belief in gold, but it doesn't have to happen for the gold to go up.
That's right.
No, I just know, as a writer in the Commodities Report, I get that question all the time. And,
Yeah.
and I remember last year when I had, so many students ask, well, aren't we waiting for a dollar? Aren't we waiting the dollar breakdown? And I'm like, no, the fundamentals of the dollar are not the only fundamentals creating this positive backdrop to gold we see. And I wrote actually several articles on, listen, it is currency weakness as a whole. I just wanted you to emphasize that.
The correlation status, Tim, how many years ago did I call the correlation status on oil versus dollar being dead?
Oh,
5, 6 years?
2014, I think.
2014, 2015.
Yeah.
Right. And yet for the next 5 years, people in the market still made that analysis. But how many times do you see that analysis in the oil market any longer?
It doesn't happen.
It doesn't happen.
Yeah.
Why doesn't it happen? Because the
the
actual
dynamics
people who
changed.
know about this shit identified it 5 years ago, and it just took them 5 years before they stopped getting clicks on it. That's why. So people who still rely on correlation or divergent analysis on the dollar in the commodity market, they just don't understand how this works in the world of modern monetary theory. This, and I don't blame them, because this has been a very difficult economic and monetary policy to understand. But the philosophies, the traditional models of correlation of dollar versus commodities, every year for 20 years is getting a little less and less and less. Ever since 1999, when China and Russia tried to stop buying oil in US dollars and started trying to buy Iraqi oil in newly minted euros. Ever since that time period, when you had 90% of oil financed in dollars, ever since that time period, 1999 till 2015, 14 and 15, when Saudi Arabia decoupled based on their oil, their oil war that they were having in 14 and 15, every year that exposure got less and less and less up until 14 and 15, when it was completely shot out the window. Traditional analysis has to be modified. Traditional analysis has to be modified from the 80s to the 90s till today. And so I totally respect and understand the question on the dollar, because we still see some of that correlation in the dollar and gold. But when you're in an environment of modern monetary theory where central banks literally race to the bottom from a devaluation currency perspective, that creates a lot of neutrality. Not all the time. You'll see the dollar trend up and down, and you'll see the dollar trend up and down again. But what that creates is pockets of neutrality. And in those pockets of neutrality, what you're seeing is every central bank increase money supply to devalue their currency. So you have every country increasing money supply, which has a net impact on the buying power of every currency to the negative side. But the way we trade currencies in the Forex market, one currency has to go up in value based on an appreciation or a depreciation. So what you see in the actual currency markets is net neutrality as these central banks race to the bottom. That creates a pocket of neutrality. But what does it impact on gold? The actual real buying power of the net currencies around the world go down in value. So even if in the short term gold goes up in value, that more than likely is not because, or not gold, but the dollar goes up in value. That's not because the fundamentals of the US economy are improving. That typically could be simply a central bank makes this announcement and this currency had to go up or this currency had to go down. So when you see this on the dollar index, you're just seeing the dollar in comparison to the rest of the currencies. What in reality is happening, the base value of the purchasing power of those currencies constantly decrease in value based on the increasing of the M2 rate across the countries around the world. So the dollar does not necessarily need price depreciation for gold to see price appreciation in an environment of modern monetary theory. Now we are very, very, very new into the world of modern monetary theory. So this is an ongoing conversation, but as of right now, you do not need it. I see it as a kicker. If the dollar goes down, that's a kicker to gold. But the one, like how many times in the last 5 years did you see Jim Cramer come out there and say, well, if the equities go up, gold goes down? How many times, Tim?
Cramer has made that
If
statement.
equities go up, gold goes down. That
That's a
is
Wall
a
Street guy.
traditional philosophy, right?
Mhm,
And
that's the
how
Wall
many
Street guy.
times did I say that's idiotic? That is fundamentally idiotic in the world of quantitative easing.
When's
Whereas
the last
both,
time that was even true?
it hasn't been true for years, Mark.
Like,
But
I can't
that's
even
what
remember. It's been
happens.
so long.
These lazy analysis on Wall Street, they never adapt or adopt or evolve their models because they don't need to. Because if they show an 8% average gain to their investor class, their investors think they're doing good. These Main Street models, outside of some algorithms of JP Morgan, Goldman Sachs, Citadel, and Virtue, outside those algorithm-based models, those traditional models haven't been updated in 20, 30 years.
Mhm.
I cannot believe people rely on Wall Street to get analysis any longer.
Well, they're still operating on the old John Murphy intermarket analysis thesis from the 1990s, Matt. That's literally what they're operating off of.
Every one of these indicators, RSI, stochastics, MACD, when were they created? The 1980s. When did all these fundamental type valuation perspectives? Can Slim, the 1960s. Can Slim, the 1960s was when that was adopted. When was the last time that was modified?
It hasn't been.
It hasn't been.
No.
Things change, things evolve. Wall Street doesn't do it as well as some of the micro operations out there.
I agree with that 100%. We've got 7 minutes till the Fed
And
statement.
I'm sorry for that soapbox.
No, I love the soapbox, by the way. I absolutely loved it. I think that it's an important thing because
when you've been saying it for 5 years and you still get the same questions, like, how much analysis do you guys need? We got to be data driven.
Think about this, Matt. If they're team tackle out there, they understand the
Oh, they've
fundamental
heard that soapbox before.
But if somebody brand new is coming off the turnip truck and they're just here for the very first time, understanding the context about the way that we should be doing analysis as individual traders is critical and crucial. You've got to be the type of thinker that doesn't get pulled into headline news, doesn't get pulled into simple arguments that Wall Street just regurgitates over and over and over again, and do your own thinking.
Now,
So I think it was
now there is still far better correlation on the dollar and gold than there is dollar and oil.
Oh,
the dollar is still important to gold.
Yes.
I still use the dollar in my analysis on gold. I'm just saying both can be true. The dollar goes down in value, gold still goes up in value, but gold doesn't necessarily have to go down in value simply because gold goes or dollars go up in value.
One flatly, I think Bitcoin completely can beat to its own drum because that was part of your question as well, Mark. Bitcoin's
being treated as an aggressive asset class right now.
For sure. Matt, we got to do some earnings roundup. I know you got a couple companies that we wanted to take a peek at.
I do want to talk just a couple companies, fairly important companies, want to get your guys' take on. I do want to start with Qualcomm here, not Qualcomm. Qualcomm. There was no conning on their earnings report today. And the one thing I want the team to think about right now, Tim, is remember last week. guys, remember the week before last week. Remember all of these earnings reports last week. And stop me if you've heard these numbers before. Qualcomm, $1.45 versus $1.22. Fantastic beat on EPS numbers. Revenue, utter destruction. 8.3 billion versus 5.9 billion. Tim, did we see these out of Amazon last week? Did we
Amazon
see
crushed
these
it.
out of the tech space last week?
Google crushed it. Yep,
Did we see
absolutely.
these? Okay, so, but what happened? They all came down in value. What's happening post-election? Gap up. This is what would have occurred on Amazon, Facebook, Microsoft, just to name a few last week.
Mm-hmm.
The market was concerned with other things. This is one of the reasons why I'm saying the market is focusing on earnings again, because of what's happening with Qualcomm. Now, I'll tell you guys, Qualcomm had a amazing report. 1.45 on the EPS number, 8.3 on the revenue, both very, very impressive beats. Increasing guidance, guys, by about 10 to 12% on EPS for the first quarter for next year. So the triple whammy there. Couple that with a 73.4% rise in year-over-year earnings. This is one of those reports that you look at and you're like, oh my goodness, there's not a flaw in this report. Mark, what's your read on Qualcomm here?
Listen, obviously in this market, earnings that are good, that are decent, they're going to get rewarded tremendously. What a difference a week makes, right?
Yeah,
What a difference.
Well, and even before we saw that on Apple and Facebook and what were we saying the week before? Guys, earnings aren't getting gobbled up. It's a different environment. You got to adjust. You got to adjust. You can't just rely on what happened the previous quarter. We're seeing new themes, new trends, new situations develop. Now we're seeing it again. Earnings is coming back into focus. This to me is a wonderful earnings report. Now let's look at it from a technical perspective. First and foremost, you are seeing a metric rise in Qualcomm, but that we just simply have not seen in years and years and years and years. That's number one. Number two, if you guys don't remember, I don't want to do a comparison to Microsoft here, but Microsoft had that decade. You know, we've talked about it with IBM before. IBM, Tim asked me the question on IBM's earnings report. Does IBM have the ability to recapture what Microsoft did? And I flatly said no. No, it's IBM. They're already splitting off IBM. That's how weak they are. No, Qualcomm, a decade of nothingness. Positive earnings last quarter, positive earnings this quarter, growth coming back massively. Can Qualcomm be a stock we talk about very similar? I don't know. Qualcomm's not Microsoft. I'm not trying to say. I am saying we have seen historical examples of a decade going where nothing happens and then utter domination occurs. We've seen great headlines out of Qualcomm for 6 straight months. Qualcomm has an amazing earnings number here today. Gap up and consolidate here. Now let's see what it reads post earnings like. But I'm going to be very, very specific with you guys. Do you have interest in Qualcomm? Either adding to positions or initiating positions?
I wouldn't trade it here, but yes, it's going on a watch list. If I get a technical signal, the same thing Frank would tell you if you asked him the question tomorrow. If I get consolidation, high base into a breakout, absolutely. If I get a little retracement into a flag and then a nice signal, absolutely. You have to love the trend, the momentum. I mean, we're at clear air here, guys. So absolutely on a good signal, I would, Matt. But no, obviously not today for me personally. I'm not going to bar by bar that. I wouldn't momentum chase.
I mean, and just pull up Nike's chart, obviously different industries, but because earnings are funny things, right? And a lot of them depend on the environment you're in, the signals. But like, you know, you got a nice gap up on earnings, and you know, earnings can be really, really funny in the market. Pull up Logitech now, LOGI, and both of these were heading into very stagnant environments, but you can get really good signal if you're patient, right? This looked like the Bitcoin pullback where what's talk might happen. Big, huge gap up, pull back to the rising 20, lift off. It's really positive for Qualcomm. It's just finding that trading signal that you like.
Yeah. Yeah. I think with Qualcomm, it's if you're not looking at it, you should be looking at it. Qualcomm should have been on a watch list months ago, but I still think based on what I'm seeing out of their earnings numbers, guys, and I know new traders look at all-time highs and are like, oh, gross. I gotta buy after everybody else. That's kind of how trading works, guys. That's how trading works over time. You're always buying after somebody else drove price up. So in terms of this, I do think Qualcomm has to be on a watch list. Mark, one of your favorite companies, Match.com. Match.com's got to be on the Mark 100, correct? It has been for.
Listen, I've been talking about Match.com forever. So
well, you're going to be talking a lot more about Match.com, Mark, because Match.com overall earnings numbers lukewarm here, quite frankly. I mean, nothing to be too geeked out about on their earnings numbers. These earnings numbers, quite frankly, would have been demolished last week. You'd be talking about Match.com last week down 10%, guaranteed. That's how, and I'm not saying they're bad, 45 cents against 46 cents on expectation here. But again, 14% of companies, only 14% of companies have not beat EPS numbers coming into this year. Add match to the list. Revenue numbers they did come across. 81% of companies have beat revenue numbers so far. 639 million versus 639.8 million versus the expectation of 604.4 million. Revenue did increase 18.1% year over year. So when you're looking at the raw numbers, year over year growth, EPS and revenue numbers, there's nothing here to be like, wow. And that's why I say, with the backdrop of last week, if this was last week's report, we're talking about Match.com getting crushed right now. It's amazing what a week to week makes, especially when you're talking about everything we're talking about over the last week. But here's why it's up today. Tinder, 16% year over year increase in subscriptions for Tinder. Post-pandemic, we've seen an actual increase in subscriber growth for Match.com. So that's why we're looking at an upward movement of price. What do you guys see here technically? Because I see a potential breakout yesterday with the follow through here today with potential momentum building.
I see that as well. I love the weekly chart breakout that just happened last week. I think it's really interesting that we are getting this kind of price action from the market today, when you're right, Matt. I think last week it probably would have been down, even on the same numbers. I absolutely think you could still, you could probably enter this with momentum here at this point, Matt, if you wanted to bar by bar it, put a stop below the candle today, intraday stop, something like that. I see an incredible trend developing, and just, an overall a stock that has sentiment behind it. People that want to own Match, they're going to continue to buy.
Even momentum. Look at the volatility here, guys.
I get that.
This is because of the uncertain nature of their earnings report. That's why. Let's look at Qualcomm for a second. Excuse me. Let me actually type in Qualcomm. Okay, that's just a misprint. That's just 1 second of data. Up, consolidate. Like on Qualcomm. So I see the technical chart on Qualcomm a little better on the daily chart. And so I certainly understand what you're saying, because I said the same thing. But when you're actually mapping out a potential momentum trade, it's far better on Qualcomm despite the doji. Entry above 150, stop loss under 140, under 145. You take whatever that risk is. And if it does break out, you drive the momentum to the upside. Whereas where you're looking at it on Match.com, the actual technical chart looks far better here. I'll give you that. The technical chart on the weekly chart looks far better here. I'll give you that. But on the intraday analysis, that is really difficult to map something out because you got to put a stop loss all the way under 128, and that's just going to be difficult to map out reward to risk ratio. So for me, and agree or disagree, Qualcomm, I want to see how it performs between 145 and 150. I'm looking at 150 as a continuation of momentum to the top side. On Match, I'm looking at this on a weekly chart, but I want to see how the market performs over the next few days.
Marky, what about you?
Qualcomm's by far a better momentum trading candidate, without a doubt. Listen, Matches.com was about what I expected, about 12%. Listen, there's a lot of lonely people. I look at Match.com like I look at the sports betting arena. Match.com for me is one of those 10, 15, 20-year. I love this space. I love Match's dominance of the intellectual properties in the space. For those that have heard me off and on over the last couple of years, I mean, I've been a huge proponent of this company. Still like that. It's pricey, right? So I look at it like I do DraftKings. I have naked puts at $80 heading into earnings. You know, I'm going to look for a discount. It's one of those companies that if you get that big market freak out sell off that I would look to acquire. It's a little pricey from a fundamental, and I do like from a fundamental standpoint, it's a little pricey right now. And from a momentum standpoint, charts like Qualcomm are much better. You know, I love the pullbacks when they occur in the Qualcomms, the Logitech. I expect Match.com to be a decent cash flow stock over the next little while, but momentum trade, I like Qualcomm a lot better.
Okay, good. By the way, the Fed just did release their statement about 5 minutes ago. Market's not doing much yet. It's going to be the presser if
It's the presser.
Anything.
Nothing in the numbers. We need to see the press conference out of Powell in 30 minutes.
Absolutely.
The only headline I've seen at this point is that Fed is going to maintain monthly asset purchases of 120 billion.
Yeah.
Yep. See what he has to say. Matt, you got a couple more, I believe.
Last one I have is obviously one of the more important ones, and that is BABA. BABA weekly chart, a little bit of a gap down. Weekly chart's been performing though. Daily chart, a little bit of a gap down over the course of the last few days. Let's take a look at their actual raw numbers because we haven't really seen a lot of price movement yet. You saw a double bottom right there at about 280 on the daily chart. That would be an intraday double bottom, not something to be overtly concerned about or put too much emphasis on. But their raw numbers actually were okay. I don't want to say they're robust, and they didn't really get me, my blood, moving the same way Amazon and Microsoft and Facebook does. I would put this into the Apple category. A good, fairly decent report, but not knock your socks off type report is personally how I would put it. Now, I do put it into that Apple category, but Apple had a fairly decent report. They just didn't have Microsoft. They didn't have Amazon. They didn't have Facebook. They didn't have Google, right? Still had a fairly decent report. I'd say put BABA into that level as well. BABA came in at 265 on EPS numbers versus the expectation of 212. Revenue came in at 22.8 billion versus the expectation of 22.9. So you did have a nice substantial beat on EPS numbers, slight miss on overall revenue numbers. Growth was and I know this sounds weird, but I wasn't impressed with 37% growth for BABA. And if this was Facebook 10 years ago or 7 years ago, I wouldn't be that impressed with that on Facebook either. But it's not bad. I just wasn't that impressed by it. Like, I was very impressed by the 73.4% increase in growth on Qualcomm, slightly less with BABA. But I think the muted reaction to the market is the accurate one, to be honest with you. I think there's enough to look on the bullish side to be like, well, we had very good EPS trends. We had a decent revenue growth year over year. But on the drop side, once again, 81% of companies so far have been beating revenue numbers. BABA was not one of those. They were one of only 19% of the companies to actually beat overall revenue expectations. So I think the muted response is the accurate response for BABA right now.
Marky, what's your read here? Obviously, one of the biggest names out of China, one of the biggest tech firms in the world here, kind of a muted response. Matt's broken down the numbers. What's your read on BABA here?
You're going to have a hard time getting real growth here. I don't know. See, I've been waiting for like the Chinese stocks post-presidency signal. I'm not seeing that yet, right? So like I thought there might be some pattern, some of that. I'm not seeing that yet. FXI has been up since the election, gapped up nice, which I thought was nice.
Why the underperformance on BABA? Do you think it's tied to?
I think it's the Ant Group thing.
The Ant Group.
Yeah, I do.
Ant Group IPO.
I firmly believe it. I mean, you got to.
China's been running.
Alibaba owns 33% equity.
Yeah, it's a big, it's big deal. Ant Group's big deal for BABA.
And I'm sorry, I hate talking politics, but it's just the thing. A Biden presidency for Chinese stocks, and this is why it's running. It takes a lot of the trade war risk off, right? Biden's been very out about trade wars, about escalating tensions. As soon as I get that boom, final president, because it's not over, right? They're still counting votes, and there might be a minute or two. We have a pretty good idea who's going to be president, but we don't have that final confirmation. I think there's some room to run in Chinese stocks from a trading and position trading situation.
Yeah. Yep. All right, guys. Matt, I think that's pretty much all of the earnings roundup.
Yeah,
There were
I
some
mean,
other companies. Some,
there was a ton of other companies,
GM
GM
had earnings.
today,
Yeah.
and GM is, and I do want to, I'm not ending on GM just because, oh my goodness, look at GM. It was just one of those stocks, and there was 50 other stocks. But with what was going on in gold today, I was very interested in the gold stocks. Obviously, Qualcomm, Bob and Match are very popular market stops. GM is one of those stocks. And again, there's 20, 30, 40 other stocks just like GM that are reporting today, but you kind of got to decide, right? I don't want to be breaking down earning numbers all day long. So I got other things to do. But GM is kind of on that cut list for me, whether I wanted to talk about it or not. The only thing I'll say about GM here today, guys, is, I mean, a decent report. EPS numbers were really, really, really fantastic at $2.83 versus 147. Revenue numbers were down 35.5 billion versus the expectation of 38. So yet another company to miss on revenue. Year over year earnings came in at nothing. No growth, no contraction here. The only thing I'll say on GM, and the only reason I wanted to bring it up, because I don't think you can actually take anything from their earnings report, a little bit of a hit and a little bit of a miss, is just this technical level right here at about, right north of 37 and change, depending on how you personally want to identify that. I'm looking at GM as a stock that has some momentum in it from a trend perspective. Pattern's been fairly consistent over the course of the last couple months. I'm looking at this as a bullish retracement with confirmation. And now you're fighting up against a potential breakout here on that 37. Like I said, it was right there north of 37 and change. Maybe even give that a mark right there at 38. That's why you got to kind of select that for you as the trader. That's kind of your aggressive versus conservative confirmation that all of us have conversations with ourselves. But I'm looking at that as a potential trade above that one with the target, pretty conservative short-term target right there in that $40 range. When you're looking at GM on the weekly chart, this is the first time we've been fighting a battle at the 200-day moving average on the weekly chart all year long. We've seen a lot of other battles on GM. The reason I say 40, and I like that momentum to 40, if you get above 40, you're talking about coming into these major resistance areas of 40. You got momentum in you from a trend perspective. I could see that $40 mark actually getting broken over the next few weeks. And if 40 does get broken, you're not talking anything until 45. I like what I'm seeing on a technical perspective on GM. I like the potential breakout here off of the continuation of the bullish retracement. Target would be 40, ton of evidence of 40. Obviously, lock in profit, scale out, trail up position. Let's see how it performs at 40. But then if we ultimately do break out of 40, which will be the best trade for GM, you're already scaling into that as we go into that $40 mark. So that's the only reason I wanted to bring up GM here today, Tim. Just more from a technical perspective, I kind of like this. And whereas we talked about Bitcoin today, very aggressive. Whereas we talked about other aggressive asset classes, as we're seeing this metric rise in technology as the deregulation theme is starting to be adopted. There are some really good, more conservative plays. And I think it would be, maybe in one of these podcasts, maybe next week or the week after, I think we should start talking a little bit about value. And if value is coming back, because GM would be considered more of a value play. I wouldn't exactly put it into the growth aspect of the world. Are we seeing a little value coming back? Because the aggressive trader, it's like 31 flavors out there. Just pick your poison, right?
Mm-hmm.
But to the conservative trader, when they're like, well, yeah, Bitcoin's running and these aggressive assets are running, but that's not for me. Is value starting to slowly come back here? Value's been underperforming for well over a decade now. And we've talked about this many times over the last decade. When's value going to have their moment to shine? You're starting to see a little bit of value pick up, just a little bit, not a lot, but just a little bit.
You know, I'm glad that you bring that up. I actually had planned, I'm going to do this weekend, spending some time really digging deeper into some of the areas of the market that just have not picked up this week from the growth push. Because
Yeah.
there's a lot of different industries and sectors that are grabbing my attention right now that aren't necessarily those big growth names that everybody knows about and all that kind of stuff. And I do think that if we are going to get this theme in the market with this backdrop of the thesis that you've kind of described, it won't just be tech running,
No.
so I think some interest in other areas is something I'm going to be looking
Well,
into.
and especially, you know, we're probably going to get some further news on the presidency here today, and you know, it might run into to tomorrow. And obviously, we're going to have some legal battles that, you know, the market and our country is going to have to navigate over the next 2 to 3 weeks, most likely. But you know, so there is some uncertainty there, Tim. But you know, like I said yesterday, and like I said even before the election, regardless of what happens and I'm talking politically here, regardless of who actually ends up winning the presidency, I made this choice for me that I was going to give either individual the chance to put their agenda in place and see if we can come together as a country and act more civil towards one another. And if that is, you know, President Trump getting a second term, I'm giving him a clean slate. I'm giving him a chance to put his agenda together. There's some policies I really do support out of the Trump administration. I think he's done some good in the criminal justice reform as well. And so I'm going to give anybody who wins this, Biden and Trump, I'm going to give them a chance to heal this country, bring this country back together. And from a trading perspective, you know, regardless of who the president is, over the next 3 to 4 weeks, we're going to be talking about certain sectors and certain industries, whether it's Trump, whether it's Biden, some of those, once we start seeing how those agendas are going to be played out from an economic perspective and how the market adopts them as themes potentials, i.e. infrastructure. At that point, you know, you can start looking at sectors and industries and say, where can we map out the next 4 years as these agendas start getting put out there into the market? And I like that type of analysis. I do. And I think we got to be open-minded from an investor perspective, regardless of who the president is, guys. We've said this for a long time. Tim, how many times before the election we said it doesn't matter? Market's going to go up. Markets go up over time, regardless of who the president is, guys. We're not going to see 401ks die. We're not going to see IRAs die. We're not going to see stock valuations utterly in the tank. The market always adopts a theme over time. Stay with us. We're going to be analyzing and adopting certain themes over time as well.
Love the messaging. Go ahead, Mark.
Just reading the Fed statement. It's a total punt. It is literally not a darn thing different on any aspect in any.
That's widely expected. They widely expected. Press conference, the question in the press conference, and if this question does not happen, I'm going to pound my face into the cement to a bloody pulp out of punishment for it. Not out of me, out of that individual.
That was dark, bro.
Yeah, because the question has to be asked. The question has to be asked. With the Bank of England injecting 150 billion pounds of quantitative easing, are you guys thinking about furthering your quantitative easing of $120 billion a month? Jay Powell has to get on record after what the Bank of England did and after the obvious market response today. He can't play politics there. He's got to get on record there.
Mm-hmm. I'm looking forward to seeing what he has to say about all those things and the market response. There's a lot of obviously things we are tracking in that regard here. We will analyze it all tomorrow once we get a little clarity through the day. And also remember, by the way, on Fed stuff, guys, it's not always the first response that matters. We are dealing with a news conference and then a 24-hour cycle. By tomorrow, we should have some clarity on the charts. So let's focus on that. Let's break down the chart analysis, the information tomorrow when we get there. Tonight, we got a Cash Flow Club, Mark, I believe, who's hosting that tonight, by the way?
Gino Poor is hosting the Cash Flow Club tonight.
Gino Poor, come and learn cash flow.
Oh, Gino's amazing.
From one of the best option traders I've ever known in my life. 6:30 p.m. Mountain
What's
Time.
The topic?
8:30 Eastern.
I don't know what Gino's talking about tonight. I do not know. So
you should be talking about like cash flowing in those mining stocks right now.
That's not a bad call. I actually like that a lot. We'll talk to Gino here a little bit. Maybe put a little seed in his brain there.
You know what I was happy about today?
We
didn't analyze crude.
I know. Yeah, we just
It felt good.
It did feel.
It felt right. It felt right.
Feels
It did.
all is right with the world.
It felt right.
Bitcoin is the new crude oil. So
Cody.
When do we punt crude off the commodity report?
listen,
Well, we added Bitcoin.
Yeah, we're not punting crude. It's never happening.
We did
Never,
add
ever, ever.
Bitcoin
We're
to the
never
commodity
punting
report.
crude.
Yeah,
Crude's too important to the economic
absolutely.
scenarios.
Oh, I just
No,
wanted to say, Dina's giving us a sneak peek to the next song.
oh, is she?
Noah the
Noah the
red-nosed
Red-Nosed
trader.
Trader.
Oh, I love that, Dina. Noah has to put on a Rudolph nose and sing that song. I will sing Delta Baby if Noah raps Noah the red-nosed trader.
Now there's going to be an entire concept album around this thing. I like the way that we're trending with this. All right, boys, that's all I've got today. Let's start wrapping this show up and finish it up. Cody, thank you for hosting. As always, appreciate you. Matt, great job on analysis. Mark, just pitch our 15-day trial if you can. One last time.
Our 15-day trial, listen, we offer a ton of value for our members, whether you are an experienced trader or a new trader. We have live shows in the morning. We have live shows at night. We have a slew of weekend reports. We have a number of blogs that are exclusive pro member. Greg Holmes just wrote a great blog for rookies. If you are a new trader, just absorbing all of Greg's material alone is worth a trial membership. 15 days. We have an amazing community. Come give us a try. See if we're for you. Go to tackletrading.com. Go to the store tab to sign up for that trial, or you can email me at team@tackletrading.com, and I'll set you all up.
Wonderful. All right, Team Tackle, we will be back tomorrow. Have a blessed and safe and wonderful day. We'll see you